Federal Reserve versus RBI Part 2. In the previous video, we have discussed the Fed and the RBI are both central banks with similar responsibilities. They have some key differences in terms of their structure, approach to monetary policy, financial regulation, and their role in providing financial services to their respective governments. Now, we will compare the Federal Reserve, Fed, and the Reserve Bank of India, RBI, are both central banks with different capital and asset structure and their different numbers of employees and liabilities. The Fed's capital is primarily held by member banks, which are required to hold stock in the Federal Reserve System as a condition of their charter. The Fed's capital is not publicly held and not traded on any stock exchange. As of 2021, the Fed's capital is around $33 billion. On the other hand, the RBI is fully owned by the Indian government, with no private shareholders. The RBI's capital is held by the central government and is not traded on any stock exchange. As of 2021, the RBI's capital is around $5.5 billion. As per latest data, the Federal Reserve Board on Friday announced preliminary financial information indicating that the Federal Reserve banks had estimated net income of $58.4 billion in 2022. In terms of assets, the Fed holds a diverse range of assets, including U.S. Treasury securities, mortgage-backed securities, and foreign currency reserves. As of 2021, the Fed's assets are around $7.5 trillion. The RBI also holds a diverse range of assets, including government securities, foreign currency assets, and gold. As of 2021, the RBI's assets are around $600 billion, and as per 2002, it was $761 billion. It's worth noting that the Fed's assets are much larger than the RBI's assets, reflecting the larger size of the U.S. economy compared to India's economy. The Fed's assets also include a large amount of securities which are used to implement monetary policy, while the RBI's assets are more focused on maintaining the country's foreign exchange reserves and providing liquidity to the banking system. The Federal Reserve, Fed, and the Reserve Bank of India, RBI, are both central banks with different numbers of employees and liabilities. The Fed employs a large number of people across its 12 regional banks and the Board of Governors in Washington, D.C. As of 2022, the Fed has around 20,000 employees, who are responsible for a wide range of functions, including monetary policy, bank supervision, and financial services. The RBI also employs a large number of people across its various departments and offices. As of 2022, the RBI has around 17,000 employees, who are responsible for a wide range of functions, including monetary policy, bank supervision, and financial services. In terms of liabilities, the Fed has a large amount of liabilities in the form of Federal Reserve notes, i.e. paper currency, that are in circulation. As of 2022, the Fed's liabilities are around $2.2 trillion. The RBI also has a large amount of liabilities in the form of banknotes and coins that are in circulation. As of 2022, the RBI's liabilities are around $300 billion. The Fed's liabilities are much larger than the RBI's liabilities, reflecting the larger size of the U.S. economy compared to India's economy. The Fed's liabilities also include a large amount of currency in circulation which is used to support the economy, while the RBI's liabilities are more focused on maintaining the country's money supply. About $3.8 trillion is the Federal Reserve worth. On the other hand, RBI has $532.30 billion. Both the Fed and the RBI have a significant impact on the economy of their respective countries. The Fed's actions and decisions directly impact the interest rates, inflation, and the overall economic performance of the United States. Similarly, the RBI's actions and decisions have a direct impact on the interest rates, inflation, and the overall economic performance of India. Thanks for watching. KudosKuber bless you with fame and wealth.